Hey everyone, in this video we're going to be going over the Polestar news. They are doing a SPAC merger with ticker GGPI. We're going to go over our opinions on it, we're going to look at the investor presentation, and we're going to determine if it's worth buying for us or not. That said, if you could smash the like button, it really helps the YouTube algorithm, and if you haven't subscribed to the channel, definitely subscribe. I know it's been a little bit since I've posted here, so I did want to let you know I am working on a few things for the YouTube channel, but I want to make sure I'd rather just post content when it's necessary and it has value to you. I don't want to just post daily just to post. So I will be posting not as often, but when I do post, I hope I'm providing quality videos for you to watch. Now let's get into this investor presentation. If anyone wants to see it themselves, they can just go to Polestar's website and go to the investor tab. You will find the investor presentation there. Now, the first thing we see on this presentation is about senior leadership from Polestar and also from Gores, the SPAC that is merging with Polestar. As far as Polestar's side, the CEO, Thomas, was actually a previous senior vice president for design at Volvo. Volvo is a massive investor in Polestar, so something to know about that. As far as Gores, the SPAC that is merging with them, they are not new to the SPAC game. They have been doing SPACs for a while. They have brought companies like Hostess, Luminar, many other companies that you can see here. If you want to freeze it here, you can read about these different companies they brought. Just to sum up how the performance has done for these companies, what I did do is I went and looked at some of these stocks, and I am pulling them up on the screen so you can see how they performed since their inception from as early as 2016 for Hostess to some of the later projects that happened actually in 2021. So if we look here on the left side now for Hostess, for example, we can see that they're 75% up from basically their start in 2016. So it has been a long time. It's not as much as some might expect. As far as Vera Mobility, we have 58% gains. Not everything was a win. PAE down 37%. Luminar up 78%. UWM Holdings down 24%. Matterport up 70%. So basically, we do have a mix. A lot of these companies are either up 70% or down like 25-30%. So if you did invest in all of the companies from the beginning, you would have made money overall. But it is important to know not everything has been a winner that has come from this company. Now, when it comes to Polestar, it was originally founded as a racing company. It was founded in 1996, so way sooner than most people realize. And the Polestar Cyan Racing was founded in 2005. In 2011, they became the official performance partner for Volvo cars. Then in 2015, they got acquired by Volvo Car Group. 2017, the Polestar 1 got announced. 2019, the Polestar 2 got announced. And in 2019, it was also the completion of their first Polestar production facility. In 2020, first customer handovers in retail stores in operation, and they're planning to scale up from there. Now, they believe they are combining the best of both worlds, both the established OEM world as well as the startup world. They feel they have basically credibility and scalability from the established OEMs side, and then they feel they're like a startup as far as agility and disruption is concerned. Now, I do believe this is true. They are kind of a mix between this established OEM side versus the startup side. That said, that does come with pros, but it also does come with cons. There are things that hold it back when it is basically tied to this established OEM. They then get into their core beliefs, going over values, design, sustainability, and then community engagement. I think that's basically, everyone has to have good values. Obviously, any car maker believes that they're making good design. As far as sustainability, I mean, pretty much any EV player should believe they are a good sustainability company. If not, they're probably in the wrong business. And then community engagement, I mean, they show 120,000 email subscribers, 790,000 social engagements. The thing is, I just don't think these are actually that big numbers. And I think this is more trying to market it to look good, but in my opinion, nothing too special there. We then get into the premium product portfolio. Now, this is where things start to get a little more interesting. They have the Polestar 1, which came out at $155,000. This was in 2019 start of production. Very small range, 120 kilometer range. Now, that said, that car does not do that well, to be honest. I'm sure many of you have never seen one on the road, and they did not sell too many of them. The Polestar 2, a much more reasonable $50,000 to $60,000 price, launched in 2020, much better range. The Polestar 2 came with 540 kilometers range. Now that car does better than the Polestar 1, but still does not do that much. In 2021, they're expecting to sell 29,000 vehicles total between the two models that they have launched so far. Then we are expecting in 2022 a Polestar 3, which will be a luxury SUV. As far as price, they don't say specific price, but they do say it will be like the Porsche Cayenne. Now, for those wondering, I looked up the Porsche Cayenne does start at $67,500, so this will be a more expensive car than the Polestar 2, which can be expected since it's a premium SUV, which usually is more expensive than premium sedans. They then go on to show the Polestar 4 will basically be a cheaper version of the Polestar 3, so think Polestar 3 being a Model X Tesla and Polestar 4 being a Model Y. Now it says Porsche Macan, and we do know that the Porsche Macan basically starts around $55,000, so expected to be more expensive than a Model Y. Now that said, this is coming in 2023. Both the Polestar 3 and Polestar 4 are expected to have 600 plus kilometer ranges. As far as miles is concerned, that's around 370 miles. And then we have the Polestar 5, which they're basically saying is going to be like a Porsche Panamera, so like a four-door sedan that's going to be a sport type of car, coming out in 2024, hopefully, and also 600 plus kilometer target range. And, the thing that kind of bothers me with this entire page is they're expecting 29,000 cars sold in 2021, and their goal for 2025 is 290,000 cars sold. And the largest issue here is that the Polestar 2, being 50 grand starting price, is actually the cheapest car on the lineup. And if it's the cheapest car, it's the one that most likely will be selling the most. Now, maybe they just need to ramp production further, but the thing is, if that car is only going to sell 29,000 cars this year, unless they really ramp that car, the luxury SUV is not going to do better than that when it's starting at a $75,000 price point. So this is something, and then we don't have till 2023 a SUV that will be a lower price point. Now, will still be more expensive than the Polestar 2, but it'll be around that price. So we're still, it's just, they are not going to have a affordable car, let's just say, for really mass scale anytime soon. It's not in the roadmap. They then kind of just show off this concept car that basically they're saying is like Polestar's future and how it's becoming a reality with the Polestar 5. But the thing is, the Polestar 5 is not coming for many years, and there are multiple cars before it. So, when your focus is on a car that's so far out versus the cars you still need to deliver, you need to ramp and make sure the Polestar 2 is killing it before you're worrying about this Polestar 5 that's going to be an even more expensive car. That's just a focus I don't think that is correctly placed. Now, when it gets to investment highlights, we start to see a few interesting things across the board. So first, they just kind of go off these highlights of first capitalizing on the fast-growing segment. So obviously, EVs are growing. Two, one of two global premium EV players already in mass production. Well, yes, they're in production, which I give them credit for because many EV startups are not producing any cars today. But that said, I would not say mass production when they're going to sell 20,000 cars. There are basically 90 million cars sold a year or so. And then third, we have startup culture with focus on innovation. So I'll give them that. They are trying to, be in this startup phase and really push the boundaries of what they can do in this car versus gas cars, which I appreciate. But they are still not vertically integrating enough, in my opinion, which we'll get into later. 4 says asset-light model with immediate operating leverage. Now, this is true in the fact that they are not going to be owning most or operating really the facilities and production of these cars. They are basically going to have other companies like Geely produce a lot of these cars, and that is good, but it is also bad because although it might help them in the beginning where they don't need to have as much capital, it is bad in the long run, in my opinion, because they don't actually control their destiny. They're not actually vertically integrated in running the factory and optimizing it for themselves. And they are also obviously going to not have all the margins because obviously no one's going to produce cars for you and not make money doing it. Now, the next thing that goes over is basically the market size in millions of cars. They're expecting 4.9 million electric vehicles being produced in 2025. Now, I personally think this estimate is completely wrong. I think it's going to be much more than 4.9 million of the total 70 to 90 million cars that will be produced probably in 2025 being EVs. Now, I think because they believe it's only 4.9 million is the reason why they are planning to not scale as fast as I'd like to see them scale. And I think that they will be surprised that the number will actually be higher, which will be good for them as long as they can scale that production. Now, to see the market opportunity, they're basically saying, hey, between 55 to 65,000 a car, if there were 5 million cars sold, you'd have 280 to 320 billion in revenue per year by that scale. And there's a lot of other things besides just the car price that goes into the EV industry, the charging infrastructure, all these things. So the market is going to be much, much larger. It's a multi-trillion-dollar industry, and the amount of cars that are going off of, I think, is not nearly enough. And the price they are putting, I think, is too high. The average car price will be much less than that. Now, as far as this slide, this is talking about how Polestar addresses the fastest growing segments of the premium / luxury market. It's kind of a little misleading because they're not going to address the fastest growing segments in the EV space. They're going to address the fastest growing segments of the luxury segment, which is its own segment. So, it's just a little misleading. If you just sum this page up, they're basically just saying they're going to sell coupes, sedans, and SUVs for the luxury market, and they're going to be selling them across America, Europe, China. They basically will have a global presence everywhere where it matters. We then see how they scale to 290,000 cars a year by 2025, basically being a range across the Polestar 1, Polestar 2, 3, 4, and 5. And the truth is, I don't believe that 290,000 is enough. I just think that they're aiming way too low, and I don't think the Polestar 2 as is going to hit the volume they need to. It's just higher price, and you get less when you compare it to alternatives. Now, I do believe their cars are better than gas cars for the most part, but when it comes to EVs, I've done so much research on Tesla. I have Teslas, and I have test driven, by the way, the Polestar 2. I actually took one out last week. And good cars compared to gas cars, nowhere close to Tesla yet. Now, when we see this here, investment highlight here, they want to show how basically Tesla and Polestar, in their opinion, are the only global EV pure plays. Now, I hate to say it, but I just am not buying that. Xpeng delivers cars outside of China to other countries already, and they plan to be fully global, selling everywhere as they continue to expand. Tesla is definitely a global player. They're correct in that. And I understand that they want to be a global EV pure play and that they are delivering globally, but they're not the only two. There are other EV pure plays, including Xpeng, that they put as EV pure plays, but they don't consider global, that I believe will have much greater scale, NIO and Xpeng actually, than Polestar. Lucid just doesn't deliver cars yet, so they're just not delivering anywhere. But hopefully, eventually, I assume they'd want to be global as well. Now, this entire slide, I basically can skip it because they're just saying, hey, they've won awards. Now, not many of these awards mean much to me, in my opinion. It's really just like, what are your numbers and what does your car do? I got in the car, I drove it, and, I gave it my own assessment. But these awards, I understand this slide is to present to investors, so they want to show the awards they got. But then on the right, they talk about sustainability and how it's more sustainable than a ICE car. And, duh, it's supposed to be more sustainable than a internal combustion engine that is basically spewing out gas. So yes, not sure why that had to be included. Then the state-of-the-art EV powertrain development. Now this is where things start to get interesting. They're saying basically that they're developing this rear motor with 450 kilowatts. It's called the P10, has 603 horsepower, etc. And they do this to say, hey, look, we have 450 kilowatt motor, and Tesla has a 375. But the thing is that just, doesn't sit right with me is, well, what's your 0 to 60 on your car? What is your actual performance of the car? Because the way it's written here is meant to imply, 450 means it must be better than Tesla. But the Plaid gets 0 to 60 in 1.99 seconds, and so far the Polestar 0 to 60 is 4.45 seconds. So they don't produce cars that are faster and that you can buy as a consumer when you compare them to Tesla. They are not producing faster cars. So it's just a little misleading that. Then when it comes to core in-house competence, they basically are saying that they are industry-leading performance and technology. Um, I wouldn't say they're industry leading. I also would say that they aren't even vertically integrating most of this. It's all being done by third party suppliers. They even show some of these suppliers on the bottom right. And when you look on that bottom right, you see autonomous driving partners. They're basically saying, "Hey, we can get lidar from Luminar, we can get the chips from Nvidia, we can use our cars with Waymo if they need us as a taxi car." The thing is, they don't actually own these chips or these lidars or this software. They're not actually developing it themselves. Anybody could partner with these companies and buy lidars from Luminar and put it on their car if they want. And as far as producing the cars, they're not the ones really producing it. Yes, I'm sure they design it and whatnot, but someone else is actually doing the production. You could hire that company, Geely, for example, which we see here on this slide, to produce for you. So, for example, Baidu actually has a partnership with Geely to produce their EVs that they're going to be coming out with. So I just think, they make it seem like, they're this vertically integrated, fast, high technology company, but at the same time, they're not really doing much. So, you can't have it both ways. You're either basically just kind of a middleman, you're putting your brand on something and letting other people develop everything, or you're the one developing the cutting edge tech. And they are definitely not the one developing cutting edge tech. They are just basically being a new brand that is direct to consumer, and they're going to use other people that are professionals at what they do and put the pieces together and slap their logo on. That's basically what it seems like to me. Now that is a oversimplification on what it actually is, but I'm just trying to get across that point. Now, when they say asset light and scalable, they're basically saying the reason it's asset light and scalable is they don't run their own factories. They're going to, if you see very tiny letters on the bottom of the page, it says that the first production facility is owned by Polestar 1 and it can produce 750 cars per year. Extremely low production. I mean, it's basically nothing. It was for the Polestar 1. And then basically every other production facility shown here is either being produced, the cars will be produced by Volvo or by Geely. So it's not them that are going to be running these factories. They then go on to show that they are aiming to be the most capital efficient EV premium luxury brand globally. Now, that is not the case today. They're not the most capital efficient, and they're not making tons of profits or anything like that right now. So this is like something that they strive to be in the future. Would it be nice? Of course, that would be great for investors. I just don't buy it yet. I don't believe that that will be the case. I don't think that they won't spend as much if they're not going to run the factories, but they're also not going to have nearly as great margins and things like that when they're paying all these other people to do things that could be vertically integrated and have the margin baked in once you scale to a very high number. Now, digital first go to market model is the right way. This is something I do think that is an amazing point for Polestar that most people cannot do because of dealership models and contracts and laws basically saying they can't compete with their dealers. So by Polestar having this new brand that doesn't have the dealership model, they can sell direct to consumer and keep that margin. It's what Tesla does. It's the correct path, and it's something that other OEMs like Volvo themselves and Ford and BMW and all these companies, they will never be able to sell direct the main brand because they have dealerships that they cannot basically ruin those deals. There's no way they're going to be able to buy up all the dealerships. There's no way out of it. It basically means that they will not be able to compete long term. So they will all make their own separate brands, just like Volvo has this, Polestar brand where they're going to be able to sell direct to consumer with it. I predict almost every OEM is going to do something like what Volvo is doing with Polestar, so they can sell direct to consumer and keep those margins. Otherwise, they will not be able to compete with those that are selling direct to consumer. They then go in to say they're going to be globally supported by different type of location formats. So for example, downtown metropolitan areas or located in urban industrial areas will go from currently 40 locations to 150 by 2022. And they're going to have these other type of like automotive areas that will be like in the downtown area next to some kind of space. It says, I mean, I don't really understand what that's going to be versus, located in downtown, the first one, but it's going to go from 8 locations to 40, and then they'll have service points and this will include like the Volvo VRE facilities, and that's going to have more than 500 going all the way to more than 800. So they are expanding across the Volvo service as well as the Polestar branded locations. As far as some unique services Polestar is going to be doing, they're expecting to have customer financing approach, so full-fledged financing and insurance portfolio, digitally integrated real-time experiences, pricing competitively set by Polestar. They're also expecting Polestar financial services to be best in class with banking, leasing, and insurance partners because they're not going to actually do the insurance themselves. They expect to have a low balance sheet impact for Polestar. They expect to streamline the product offering through basically a direct-to-consumer model, like we talked about, lean sales model, so they're not going to have many salespeople and things like that. You can buy the car basically on the Polestar app, from my understanding. They're saying, lean sales model via a Polestar app. Standardized trim options, so kind of the Tesla situation where there's just few options. The less customization, the easier it will be to scale. Now, the thing is, that's all great, but they are not looking to scale that much. Their target is 290,000 cars. They should be targeting millions of cars. Think bigger and think longer term. Now, they have strong defined market expansion opportunities. They're saying they're in 30 plus markets by 2022 to 2023 and 150 plus locations and 800 plus service points. So here we go over the growth. They're showing the volume CAGR to be 78% from 29,000 to 290,000. It's a great CAGR, 78% growth per year. The only problem is they're just starting at such a low base, only 29,000 cars. They really need to prove themselves. That's something they have not done yet, and they are in the market. People can buy these cars today. As far as revenue, if they hit their goal of 290,000 cars by 2025, they basically would go from 1.6 billion in estimated revenue in 2021 to 17.8 billion in 2025. As far as the margin is concerned, they expect it to be around 9%, so they're expecting $1.6 billion in earnings before interest and tax in 2025. Now, to sum up these metrics, they basically expect the entire industry, the total addressable market, to grow by 29% for them per year between 2020 through 2025. They expect that they will have 78% growth per year between 2021 and 2025. They believe they're going to get into 20 new countries between 2021 and 2023. And they think they have a strong car pipeline, 3 more models coming to the market, which they believe by 2024 will see 77% of incremental sales from 2021 to 2025, driven by these new car models. Now, as far as the diverse new model pipeline driving top-line growth, they do show this volume by model in the thousands mark here. So they're showing 29,000 in 2021. They expect 2022 to be 65,000, all from the Polestar 2. They expect 2023 to be 124,000, 94,000 of which would still be from Polestar 2, 24,000 from Polestar 3, and about 6,000 from Polestar 4. Then we get to 2024. They're expecting to continue growing the Polestar 2 to 104,000, but that's where they tape it off for 2025. I can see that it's also 104,000 for the Polestar 2. They're expecting in 2024, we see Polestar 3 go to 67,000, we see Polestar 4 go to 43,000, and Polestar 5 to 11,000. And then the Polestar 3 grows from 67 to 77,000 in 2025, the Polestar 4 from 43,000 to 79,000, and the Polestar 5 from 11,000 to 30,000. So basically, incremental growth across the board, but Polestar 2 basically not growing past that 104,000 mark. As far as revenue, they're expecting it to go from 1.6 to 3.2 billion in 2022, 6.7 billion in 23, 13.2 in 2024, and 17.8 billion. Now, these are all projections. They still need to prove this out. As far as gross profit, they expect to be just barely, profitable. 0.1 billion, so we're talking about $100 million in gross profit. This is not net income. They're actually expecting their earnings to be a loss of $1 billion in 2021. So looking just at gross profit, they're expecting to go 2021 100 million, 2022 500 million, 2023 1.4 billion, 2024 2.7 billion, and they expect to get 27% gross margins by 2025 at 3.9 billion. As far as translating to actually earnings before interest and tax, They're expecting to have losses in 2021, 2022. They think they'll be break even by 2023, and they will only start to be profitable, $700 million of profit, 5% of revenue, at 2024, and then they're expecting that can get to 9% of revenue by 2025. If they hit these targets, let's say the 2024 target of 700 million in earnings, if you had a 25 times multiple on that, we'd be looking at a $17.5 billion company with a 25 PE on it in 2024. So, they're going for 20 billion today. So keep that in mind. And when looking at adjusted free cash flow, they don't actually expect to be having positive free cash flow until 2025. So, expect quarter after quarter, 4 quarters every year of losses basically coming in for this company for a long time. Now, when it comes to CapEx to fund the investments required for these future models and whatnot, they're expecting to basically spend about 700 million per year. They're saying it's going to dip a little in 2022 to 600 million, then 500, then back to 700, etc. And they're expecting their research and development, the cash spend on that, to be about $500 million for 2021. They expect that R&D number to go down in 2022 and 2023 and then start to come back up 2024 and 2025. Now, that's actually not something I like to see. As a percentage of total revenue, it could come down, but as a total dollar amount, it coming down does not provide me good insight to their future, because I think that basically if you're not spending on the R&D heavily, you're not going to come out with great new innovations and be able to expand in such a competitive market, which the EV market is. Then we basically get to look through the transaction overview and the valuation for this SPAC merger. So we see there was $800 million in cash and trust for the SPAC. We basically see there are 2,125,000,000 shares, $10 a share. It gives it an equity value of $21.253 billion, less the cash, $1.253 billion of cash. You basically have an enterprise value of $20 billion. Now this, if you want to see, basically Gores is taking $55 million transaction expense for this. But basically, they're going to be getting a good amount of cash here. They're going to have about $1.25 billion in cash after this deal is done, including the PIPE investors. They then want to show how they stack up against Tesla, Lucid, NIO, Xpeng when it comes to price to sales. But the thing is, they're going off of 2023 revenue, and I'm not sure where they're getting these numbers, because I don't know how they're going to predict where Tesla's price and revenue is going to be, because when we see in the next slide, they're expecting different numbers than I'm expecting for Tesla, which means they're probably doing the same for Lucid, NIO, and Xpeng. But they basically want them to look good, so they put 3 times their expected 2023 revenue and 1.5 times their expected 2024 revenue. Now, in my opinion, you shouldn't look at the Tesla, Lucid, Xpeng, or NIO numbers, because they are not putting what the actual projections I think are going to be for those or anything accurate. These are projections at the end of the day, but you should just look at what they believe of their own company. As far as revenue growth CAGR, they're showing 78% for themselves, and here's where I basically take big issue with it, is I see Tesla listed here at 18% revenue growth CAGR between 2022 to 2025 estimated, but Tesla themselves, Elon Musk, has literally said they're expecting to grow at 50% plus per year through now till 2030, and the earlier years they're expecting to grow at even a higher rate than that 50%. So the fact that they list them here for such a low number shows that I don't believe this is accurate, and it actually makes me feel much less confident in any of their projections. But just looking at them, they believe 78% growth per year from 2022 to 2025. They believe their earnings before interest and tax will grow by 130% from 2024 to 2025, because before that there won't have any earnings. And 2024 to 2025 gross margin, they're expecting 20 to 22%. It's funny that they list Tesla at 24% when Tesla has better gross margins than that. And they finally come out with a earnings before interest and tax of 5% of revenue in 2024, and they're expecting 9% in 2025. Now, I would look at their projections, but again, I would just not even pay attention to the comparisons, because they haven't done their research at all. It's pretty easy to see what Tesla themselves, the company, is predicting, so I don't know where they get their numbers. Now, the bottom line is Polestar worth $20 billion? Now, you can see Lucid Group is trading for $42 billion, and you can see a company like Fisker is trading for $5 billion. neither of these companies are actually producing cars and delivering them today. So, in my opinion, this is basically a pure speculation bet. Now, Polestar is delivering cars today, so there's that versus Lucid, which is not and is valued at 42 billion. So that's an easy way to say, oh, it should be worth more. But you have other EV plays that are hoping to be big players one day, but are not today, like Fisker, that are only worth 5 billion. So is Polestar worth the 20 billion? Fundamentally, the answer is no. It's not worth it today. If you take today's numbers, they're just not. They don't make any money, and they basically deliver close to no cars. Now, if they scale, the market is definitely big enough for them to be worth a multiple of that $20 billion. So if they really do scale this company, then yes, they could be worth more than 20 billion, and buying them today at 20 billion could turn out to be a great deal. But again, there's a lot of speculation and a lot of execution between now and then. So the thing that is clear to me is, one, EVs are here to stay. Two, direct to consumer is better than the dealership model. Three, automation is coming with autonomy. Four, cars are computers on wheels. Five, the pace of innovation is what matters the most. Now, when it comes to Polestar, there's a few things we can go over here. The first thing to go over is that, yes, EVs are here to stay, and they have that basically locked down. They are a pure EV player. The second, direct-to-consumer over dealerships, they get a check mark there because they are selling direct-to-consumer. They do not have the dealership model. When it comes to the third thing, autonomy, they do not have autonomy basically built in at all. There aren't cameras and sensors all around the cars yet. Could they partner with an autonomous player later? Sure. If someone else, basically like a Mobileye or Google or whatever, develops autonomy, could they add them to the cars? Sure, but they are not going to be a player when it comes to that. My fourth category, cars becoming computer on wheels. They basically get a pass here because their cars do have Android Auto. They are more tech forward than gas cars, but they don't control the software. Polestar is using Android for their infotainment system. So it is smart, but it's not something owned and run by Polestar. So they don't really, get the full check mark on that. And as far as five, pace of innovation, I do not believe they are innovating fast enough. I think there is a lot more innovation they could be doing. They're basically using third parties as much as possible, which, when it's such a capital intensive market, it makes sense, but I'm not going to give them the check mark for pace of innovation until I see some more actual innovation coming from them. Now, the deal was announced today, September 27th. The question is, are you going to buy the stock? The ticker GGPI was up 5% today, basically between the total day plus after hours. Now, I do think it could go higher. There's a lot of hype in the EV market. People do want to find ways to invest in it outside of the basically investing in Tesla. So, if you were going to invest in a company that's not Tesla, Polestar could be a great play for it. They're currently delivering cars, and they have things worked out more than many other EV startups. Now, do I think it can go higher? Yes, but I still rather own Tesla stock even today at $780 billion market cap. They are a profitable company, Tesla. They're growing at 50% a year, even while at this huge scale that they're starting at. They have included autonomy. They are vertically integrated. They own their own operating system and software. They own the charging infrastructure. And that's just the tip of the iceberg. So for me, even at this valuation, I'd rather own Tesla than Polestar. But if you are looking to diversify your EV portfolio, Polestar could be a good way to do so. Now, I do think it's extremely important to say this is not the next Tesla. Can it go higher? Again, yes, but I do not believe it will ever compete on a scale as large as Tesla competes on, and that is okay. The EV market is massive. It's going to be worth trillions of dollars, and you do not have to basically do everything like Tesla to still make money in this market. But for those that are like, oh, I want to find the next Tesla, because lots of people are always saying, what's the next Tesla? Tesla is still the next Tesla. This is just a good EV stock that could provide, good returns if they can profitably scale, and that is, yet to be seen, but it is something to follow. Let me know what you think. Are you buying the stock? Comment below. Like this video if you haven't liked it yet, and subscribe to the channel if you haven't subscribed. You could follow us on Twitter or Instagram at FFMResearch. Until next time.